there will come a day when, 20,000, 40,000, 60,000 will seem incredibly cheap. And there will be, in my view, in the future, being a whole coiner will be, you're independently wealthy. I mean, just massively independently wealthy. And so there are 54 million millionaires in the world, 21 million coins, and not, there really aren't 21 because, how many were lost? I mean, it's got to be 10, 15%. So, but anyway, if you divide it, I mean, every millionaire in the world can only have half a coin. So, and of course, most have 0 coins. And so, and there are 8 billion people in the world. And I mean, the other piece of, the other number that I just find fascinating to me, and we should get into the multiplier a little bit because it's so stunning. What this whole ETF thing has really caused me, it's kind of blown my mind and caused me to think more bullish about this than I was before. I mean, I was bullish, but not as bullish as I am now. Let me take you through the math. 700 trillion, say, of fiat denominated assets, cash, stocks, bonds, piece of it. The 350 is real estate. Okay. So Bitcoin's total market cap today is 1.3 trillion. Of course, not all that's for sale, but that is. So the 1.3 over 350, I mean, what is that, like 1/3%, of the total money out there? And so some of that 350 is going to realize that they're being debased, and the only way to protect themselves, or the best way to protect themselves, is Bitcoin. And they're going to start coming in and try and buy some pro rata share of Bitcoin. And what they're going to find is it's hard to buy, and hard to buy without shoving up the price. But they are going to shove up the price. And say the bond market's $100 trillion, okay, worldwide bond market. Even if only 10% of the bond market comes and says, you know what, we need to hedge against this, we need to get some Bitcoin. Well, that's $10 trillion. I mean, that's 10x where we are to almost 10x where we are today. And by the way, all of that 1.3 is not for sale. I mean, so, that gets you from, 60,000, 60 some odd thousand to 600,000. If it were just a straight 1-for-1 multiplier, but it's not. It's better than that, because if you look at, and I found this fascinating. Fred Krueger on Twitter has done some great work on this. Everyone recommend you follow him. It's at .Krueger. $8 billion has gone into Bitcoin since the ETFs got formed. These numbers are a few days old. Bitcoin has gone up in value by $300 billion. It went from roughly $1 trillion to 1.3 trillion. So that would imply that 8 trillion of new flows has shoved the overall value of the asset up by 300. So that's a 37x multiplier. Now, I'm not saying that the multiplier will always be there. And, what do you mean by multiplier? Well, what I mean is that, as 8 billion tried to buy it, there just wasn't enough available supply, to convince people to sell it. It had to go up that amount. And so now think about this. There's 100 billion of bonds and 100 trillion of bonds, and 10 trillion might come after this. Even if only 1 trillion came after this, you would, and let's say the multiplier is not 37. That's exaggerated right now because, we're just starting, and, the ETFs are a new thing. Let's say it goes down to 5 or 10. It would still, represent just enormous growth. I mean, if 1 trillion of bonds comes after this, that's, 10 trillion, the thing needs to go up by. Again, you kind of get to 500,000 or 600,000 a coin. So, I mean, I see a world where, we're going to go through 100, then we're going to go through 200, we're going to go through 400, we're going to go through 1 million, and eventually, we could go to 100 million, which is full hyper Bitcoinization. I'm not sure if we'll get there and when we'll get there. They might do a monetary reset before that, but I could easily see 2, 3, 4, million per coin, which is serious money. So the ETF thing has really. And Saylor predicted this. He did a great job of saying, hey folks, this is one of the few chances in history to front run Wall Street, because they just don't understand it. And in my speech in Bitcoin Madeira, I said, a similar thing occurred to me. Of course, I blew it. In 86, Microsoft came public, in 1986, and it was trading at 14 times trailing earnings and growing 40% a year, which is pretty friggin' cheap for a company growing that fast. I bought it, with my bonus and my savings, and I had the experience of meeting Steve Ballmer a few years earlier, and he had said to my roommate, he was roommates with my business school roommate, and he said, "Hey Larry, this MS-DOS thing is going to be on every computer in every household all over the world. Hundreds and hundreds of millions, if not billions, of people are going to use this. It's the base layer of these microcomputers, and they're going to be used to do all kinds of things." This was 40 years ago now. And I couldn't see it. I mean, I kind of got it. I knew he was semi-right, but I didn't fully understand it. Little did I know just how absolutely right he was, right? I mean, Microsoft is a multi-billion-dollar corporation. It's MS-DOS has evolved into, more Windows and all the other stuff they got. But his software really is the base layer of the whole PC world that Apple's come along to. It's enormously valuable. And, and by the way, back in '86, I also remember how, if you were investing in technology, which I was doing, I was at a venture capital firm and my job was to pick technology companies. Everybody thought you would buy, hardware, disk drives and memory cards, graphic cards, and because, they were real and you could touch them, and, microcomputers and mini computers. This was a little bit before the clones were just starting to come out. The IBM PC was introduced in '80 and the clones came out a few years later. Anyway, long story short, everyone was looking at software and they were having trouble with it. They were kind of like, hang on a second. This company sells software, but what is it? You can't touch it. It's just ones and zeros. It's not tangible. Every business in the world. I mean, there were service companies in the world. Everyone got that. You pay somebody to provide a service, and there were people who sold goods. And everyone got that. There were, we've had companies selling goods forever, but there was no one who was really selling intellectual property, defensible intellectual property, which is what the Microsoft base layer was for the PC. And of course, it ate the world. And so, I tend to kind of think, I use that analog as I look at, the Bitcoin development, which was really an amazing technological development. It's the base layer of money, the base layer of future money. It's incredibly obvious to me and compelling that someday this will be money. I mean, to everybody, that our grandkids will transact in sats. If you want a hamburger, that's 2 sats, or whatever the relative pricing will be. The dollar will be kind of gone. It'll just be something antique. That's pretty extreme to say that, and there are people who don't like me saying that. And even Saylor says, hey, look, let's not talk about that because that's going to freak the other side out. Keep that to yourself. But I think most of us who study it and understand how Gresham's law works eventually come to that conclusion that once it becomes obvious to everybody that this is a better form of money, which it is, because it can't be debased and it's algorithmically programmed to expand at a asymptotically decreasing rate, it's kind of game over for other currencies. And as Saylor also pointed out when he made a speech on stage in Madeira, he said, the next 10 years are really going to be the great gold rush years for this. It's, because we're kind of at the 10% adoption point. So we're now going to adoption is going to accelerate. We've still got mining reward, 6.25 today, soon to be 3.125, et cetera, et cetera. And until 2034, there will be decent mining reward. In 2034, 99% of the Bitcoin that's ever going to be mined will have been mined. And there'll only be 1% left, and it takes another 100 years. So at that point, effectively, you've got, a stock to flow there's almost no flow. When you got 1% coming in over the course of a year or 100 years, that's not much flow. So it becomes incredibly hard money at that stage. And, it's going to be much, much higher than it is today. And I think even some of us who are in it are going to be shocked. And I say that because it's people would say, well, it sounds too good to be true. That can't be possible. What are you talking about, et cetera. And I say, well, let me draw an analogy. You teleported down to somebody living in the United States in 1900, and you said to them, there's going to be this thing called the airplane. It's going to be invented by the Wright brothers. And in 1960, 60 years from now, whatever, you're going to be able to fly from New York to LA in 4 hours, instead of it being a 38-hour train ride, right? And the person will look at you and say, you're fucking nuts. I mean, there's no way. That's not going to happen. Man can't even fly. That's a pipe dream. But the airplane got invented, and and then it got slow in the beginning, and it got perfected and better and better. And sure enough, in the 60s, people were flying across country in 4 hours. And so I kind of think it's similar here. I mean, this thing got invented. It only got invented 15 years ago. The first years were really rocky. I mean, I didn't go all in because I was afraid of the technology. I was afraid it might blow up. I wish I had been less afraid, like Max. I mean, Max kind of went all in. And it's, we're now, you're still, people, I've had friends I've tried orange pill and they, recently, and said, oh shit, I should have listened to you when I was 15. I should have listened to you when I was 25. I missed it. It's too late. I can't pay 60 something for this. No, you can, because if it's really going to go to $500,000, $1 million, $2 million, 60 is cheap. I mean, there will come a time when it won't be cheap. I mean, there'll come a time when it'll kind of, it's fully distributed and its growth will, kind of echo the growth in productivity and the improvements in society. But we're a long ways away from that. We're at least 10 years away from that. So, to me, it's just obvious. And I hope more people wake up to it because, and the reason I'm such a big advocate for it is that I know it'll make the world a better place. And, I think it's important. I want to try and save people from dying in the legacy system because the legacy system is going to die. And there will be pain for people, which is sad, but it just is. And, just like there was pain. I mean, if you were in the buggy whip business and the automobile got introduced, you were fucked. I mean, or if you're making, buggy, carriages, you're making horse-drawn carriages, you're fucked. I mean, it happens. It's sorry, but that's how it happens. And it's kind of a similar model here. So
why do people, in your opinion, still have such a hard time? Like, you get so many people, the MMTers, the Stephanie Keltons, all these people are like, deflation can't work. You can't have deflationary money and all. Why? Like, can you explain, like, once and for all, like, why?
If you want the answer to that question right there and you like that spicy clip, check it out here. Come on, we'll see you in there. But if you want the full interview in its entirety, all the spicy clips put together, and you're not going to want to miss it, believe me, then check that out here. Come on, we'll see you in there. Do it.